Open range breakouts, or ORB, is an overused strategy that is simple but for most will fail. After 4 years of trading, I have figured out exactly how breakouts work and why they work. So in this video, I'm going to discuss an upgraded version of the ORB because there are some fundamental things that an open range breakout does have that is extremely strong in the markets and can definitely give you an edge. Adds things that make sure it works consistently long term, just like I take my breakouts on live on a daily basis and give you the reasons why and be able to actually trade breakouts properly. So let's get straight into this video. So let me first explain what is an ORB. An ORB is an open range breakout. Essentially what you first look for is you wait for market open, and that's more importantly going to be New York Stock Exchange open at 9:30 a.m. Eastern. As you know, we have sessions, which is going to be the most accurate due to its volatility of breakouts. Now, if you try this in other sessions, it will be extremely inaccurate. People say you can use it in other sessions. It's wrong. It's really inaccurate. You want to focus on this on 9:30 a.m. Eastern, which is going to be the NYSE breakout. Now, you can do this on different time frames, but the most popular time frame is actually going to be the 15-minute. And simply, it's extremely easy. You look for the 15-minute candle that closes at the 9:30 a.m. Eastern candle. And essentially how it will look is it will look something like this. You take the highs from the wicks and the lows from the wick, and you basically draw a rectangle like this around it, right? So we'll do it in white, and you make something like this, and this is how your open range is going to be. So essentially it's easy. What they say you do, or whoever made it says that you buy if something closes above the high and you sell if something closes below the low. So essentially buys above, sells below that open range breakout candle, okay? And it doesn't have to break out that candle. It could be in a range, and this is where problems start to occur. So what time frame do you take these breakouts on? Well, they accept a 5-minute candle close above. That is going to be a valid time frame to close above. Or even people try to trade 1-minute candle closes above as well. Now, both of these are flawed because you're missing a lot of context in this. Now, candle closes above or candle closes below, I like. That's a very key fundamental part, is to look for closes below. Close, not just a wick. If price was to wick past it, that doesn't count, right? What is a wick? It's basically this, if it doesn't close above. So in this scenario, if we were to draw an example, it would look something like this, right? So you'd see basically on, let's say, a 5-minute time frame, you would see price open, it would come up, it would try to close above and end up closing something like this, and you have this wick, and then you're stuck with an entry all the way up here and you're losing the trade because it reverses. So what's a common thing that happens in these open range breakouts is actually price will go up, grab liquidity, and then reverse for the rest of the session, and you end up being wrong. So we first need to solve that. So I'm going to explain all the common issues, and I'm going to explain how we solve for those issues and how my strategy actually works for it to get into these trades accurately. So the first thing is it reverses. You get direction wrong. The second thing is that most of the time you're putting tight stop loss to try get a quick push. That stop loss is going to be above the candle that closed above, but just putting it below a candle is not going to really protect your stop loss. Some people put it below the open range, which is fine, but the problem there is your stop loss is now massive. You're not going to optimize for risk to reward, and by the time you get a 1-to-1, price might also reverse again, and you end up losing. So we need to be able to get direction correct, get entry correct so we don't get stuck in a fake out, and we need to end up getting our stop loss placement in place. When we adjust these key factors, that's what I mean, I upgraded it, then we end up entering something that is going to be a lot more accurate, make a lot more sense, have a lot more rules that are simple, but at the same time going to increase your probability from something like this, which is maybe less than 50 at times, to increase to over 70% win rate. All right, so just this month I've taken 4 breakout trades using this strategy, and all 4 of the trades hit. One other strategy was actually taking the trade on the pullback, which I can make in a separate video, how to trade based on the pullback, not just the breakout, but I want to focus at one thing at a time. So the next step we're going to go is we're going to explain it basically how this strategy is going to work. So the first thing you want to do is you want to take the direction. If the previous daily closed bullish and the previous 4-hour closed bullish, do not be taking open range breakouts towards the downside, because previous daily bullish and the previous 4 hours bullish, that means you should only be looking for breakouts to the upside. The same way for sells, if previous daily is bearish and previous 4 hour bearish, only be looking for downside breakouts. That is very important. Your breakouts will work. This is what we call a bullish bias and a bearish bias. This will drastically increase. Now, the biggest mistake people make is that you can't just take a random open range break. Here would be a clean example. This is your open range here. We're looking for buys today. You get your 1 minute entry and boom, it reverses on you and ends up continuing down. And you're like, what the hell happened? Then comes back up. You would have been in profit and boom, your trade ends up playing out, but you got caught in this mess. And this is just simple support and resistance. You need to make sure you are trading in clean zones. Mark that. That's the reason it rejected. It doesn't just disappear because you have an open range. We need to be more detailed. So whenever we look for a breakout, we're looking for resistance and a close above a resistance. In this case scenario, we're looking for a close above this resistance here. When you look left, there can't be any mess towards the left. Look how clean this was. Price replicated this exact move. The way we moved clean in the past is the way we moved clean in the future. That's exactly the zone we want to be trading in. If there was a bunch of resistances like this, look how messy this is. Look how messy this is, right? Look how messy this is. Look to the left. It's really messy here as well. So price likes to replicate what it's done in the past. And that's why we want to make sure that we're taking these trades in clean areas where there is clean candles. And I prefer always to wait for a 5-minute close above. So I'm going to jump straight into live examples that I've taken to really showcase this and how I've taken these trades. We're actually going to go into a US 30 example. This is a trade that I took and I want to show you exactly the details of how I wait for a candle to close above and how I'm waiting for structure, a resistance to form. Okay. So what's super important is we want a resistance to form, or if we're looking for a sell as a support. So I'm going to show you how that looks right here. It's going to look something like this. So if we're looking for a bullish, we're looking for, let's say maybe 2 candles close bullish. Then we're looking for at least 1 red candle. 2 would be better, but 1 is acceptable. And then we're looking for what? We're looking for a close above that on a 5-minute candle. Now this here becomes your resistance. Now towards the downside, I'm going to draw that quickly. Towards the downside, it will look something like this, right? You have bearish candles, you wait for that 1 bullish candle on 5, then you take close below. You need it to close below, and then you target. Where's your target? Your target is the next level or a 1-to-1, right? So you're targeting the next resistance, or if you're looking for sells, you're targeting the next support. So let's have a look at a live example. This is a trade that I took. You can see here, entered break of high, closed here at a 1-to-1. The trade looks like this. That's where my stop loss was. We place stop loss below the candle that closes above, right? That's the way that we do it. This candle closed above here. I took it break of high to get a continuation. I would like to replay this trade. This would be your typical open range right here, but we don't really want to buy here, even though today it sort of played out and you did get a push. We don't want to buy there because there's all this resistance here. Remember, I want to buy above clean zone here. So I'm going to replay this so we can watch it play out tick by tick. So we're going to skip candle here. This was my entry candle. You can see how it created perfect support above here. We have that 1 bearish candle, and simply all I did is I'm like, okay, place an order here. And we're going to do a buy stop. It was break of high. Now I put stop loss back in the range. Typically you want to put it below the candle that closed above, but I chose to go just back in the range to basically more advanced stuff, understanding that this is a structural point. So it is fine to do that. And then let's go see how this trade ended up playing out. Slow it down a bit, and let's place the trade would help. Let's put it at like, 2, buy stop, and that's how it was. TP was 1-to-1. And then let's play the trade here. So it opened beautifully here, no top wick. We always want to enter break of high because it could probably just reverse here sometimes. And then this is exactly how the trade was live. So you're watching it in replay. I'm using a simulator called Pip Labs. It's a web-based simulator that allows you to view the trade. So see, if I didn't wait for break of high, you could have been stopped out, right? Otherwise, this is just giving me more confirmation. So essentially, boom, broke the high, got into profit straight away. And now I'm basically chilling, just allowing price to do it. So I always recommend back testing what you learn. So go in a simulator and simulate. Don't go live market and lose money on things you don't know. Prepare for it by actually simulating. That's what simulators are built for. And prove to yourself that this works. I know what I'm doing. And I have a strategy with data. So had some drawdown. That's part of the game. And, then it ended up being smooth. Nice volume came. And then boom. didn't hit TP there because of spreads. On our simulator here, we actually have spreads. The version you're looking at here is version 5. We're releasing this next month. If you go on our website, in the description, you'll see version 4 is a little bit less sophisticated than this, but you will be upgraded to version 5 when we release. So I would just wanted to use it for this example. I really like to explain while you see. Another way I like to explain is I actually live stream on a daily basis a London session, and here is a trade I took on DAX, which is the German exchange, but this is in London session. Now the same concept that I explained to you today happens in London session as well. Clean candles here to the left, one 5-minute candle close bearish, the next one close above. Picture perfect. You know what's going to happen. I'm looking for that buy there, target the next resistance, and happy days. So let's go ahead and look at this. So this was the trade here. You can see again, same as the US 30 trade I showed you. I take the same things again and again and again. Buy stop at the high here, and I'm just going to skip past here to when I get triggered. Then I got triggered into the trade, held some drawdown. Let's speed this up. Right, I was speaking about that little resistance there to the left. We could have some issues. Let's see how it forms. That is definitely something to take into consideration, but once it breaks the high, we should be fine. On 5-minute, it was beautifully clean. Once we broke the high, you could see just no issues there. Very simple position to hold. So just chilled in that position there, and I'm just gonna fast forward. We ended up getting a nice push here. I moved my stop loss to break even. That's a technique that I actually take a lot of the time, is moving my stop loss to break even to make it risk free. And eventually it hit TP here, and it was a beautiful trade. So that was very nice. Even today, I took a very similar trade on DAX for sells. This is, as I'm filming this, same type of idea, but unfortunately did not hit my 1-to-1. So I couldn't close. So I didn't close early there. I just got 0 out of that trade as I closed back at my entry call break even. So this is how to trade an upgraded open range breakout setup here. And yeah, it gets a little bit more complicated with a few other support resistances, stuff like that. And you can spend time, use my free content to be able to identify that stuff, study my videos, get into things, and basically find out how it is. If you want to kind of speed up that process, you always have access to join me live trading on a daily basis in our exclusive, and kind of ask those questions and go through the content that there's there in order. That would be a way to save time. It's totally up to you how you want to, tackle that. And I do wish and hope that this does help you and really stops you from taking those things that might fake you out, and actually help you get into a profitable scenario and take things that I actually show here working. So this is something that hopefully, so if you've enjoyed this video, definitely leave a like and subscribe, and hopefully I can see you for future content. With that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.